Good morning, good afternoon, good evening from wherever you're watching me from. Welcome back, everybody. Welcome to the channel. Today, we'll be looking at how to trade with moving averages. We'll be looking at the strategy we can trade with moving averages. Moving average is one of the best indicators used for day trading. So as a day trader, there are so many ways you can trade. You can trade price action, you can trade indicator-based trading, you can also do intuitive trading. Which of these ways you're going to learn and master how to trade is up to you as a trader. And we also have those traders who trade both price action and indicators. But either way, it all depends on your style and your objective as a day trader. So for me on my channel, I trade both indicators and I trade with price action. Price action is analyzing the chart, the candlestick patterns on the chart. Indicators-based trading is using indicators like moving averages, RSI, currency strength, using MACD, Bollinger Bands, and so on. All these indicators have their functions that they play. But one of my favorite one is the moving average, because moving average is plotted directly on the chart. That's why it's one of my favorite tools I use to trade. As a trader, you need several tools to be able to analyze the market. Okay, it's like being an artsman or a craftsman, somebody who makes furniture, anybody, any maker who makes something. You don't use one tool for everything, right? You use several tools for different purposes. The same way as a trader. That's why when people are searching for, hey, where is the holy grail? Teach me one only that strategy that will give me billions of money. And I just look at them and I just laugh, because in trading, you the trader, you must know the tools and when to use them and when to apply them. So either moving averages, either price action, either using MACD or using Fibonacci, you the trader, you must know when and where to apply them and your mood you are in to trade the market. So today we focus only on moving averages, and I will be teaching you how to trade the moving averages successfully and how you can make profit trading with moving averages. A moving average is the calculation to analyze data points by creating a series of average of different selection of full data sets. When we say full data set, we are talking about set of data which are being plotted. So for instance, we can have set of data like 2, 0, 5, assuming just numbers. So let's say this is a linear graph and you want to choose a moving average of 5, which means that all this set of numbers, the graph is going to calculate the latest 5. If you move to the next point, you calculate the next 5, 5, 5, 5. So assuming that we start from 2, 0, 5, 7, 0, 9, these are the first 6 numbers. So the moving average calculate the first 5 and plot a point. And whilst we know that a line is what? Series of points plot together. So the moving average is always going to plot the first 5, the next 5, the next 5, the next 5, and the next 5. This is what is called moving average. Okay, so moving average is the average of series of data sets taken from a full data sample. But on the chart in trading, how do we use this trading technique to make profit as traders? You don't have to know how to calculate the moving averages, but I just want you to understand how the moving average is calculated and how it works. If you want to go deep in depth on how it's calculated, you're going to get confused. So let's just end it here. But put in your mind that moving averages is taken from set of data. Then it's plotted according to the number you're going to set. If you set moving average of 15, moving average of 20, you take the latest 20, the next latest 20, the next latest 20. If you take a moving average of 50, which means the next 50 candles, the latest 50 candles, it keeps moving 50, 50, whilst it leaves one behind. So the first 50, it will leave one behind. Focus on the next 50, leave one behind. In this way, the line will be plotting linearly. Okay, so this is what a moving average. This means that moving average is not a single line, because it's an average of set of data from an overall set, right? So which means that moving average is not a linear line, but it's what? It's a zone. The mistake most people do is that they think moving average is a line. So they always want to watch the moving average clearly and they want to trade exactly with the moving average, but it's not like that. Moving average is a zone, which means the line is plotted, but it's a zone around the line. Okay, it's a zone around the line, because if you just see it as just a single line, then when the market touches and come down a little, you get confused. You think it's come to take you out, or you think the moving average does not work, but because you don't understand how the moving average works. Moving average is not a hit and run. It's a zone, which means it can come all closer to the moving average and reverse, or it can hit the moving average and reverse, or it can pass the moving average a little and reverse. This is what we call a zone, because it's not a single line, but on the graph, you see it to be a single line. By putting in mind that if you are trading as a day trader, moving average is not a single line, but it's a zone. Keep that in mind, okay? It's a zone. Don't be searching for that one magic hit that's going to make you millions. No, you must understand what you're doing as a trader. So let's see, for example. On this chart, you can see that there are moving averages on this chart. Later, I'm going to explain to you which kind of moving averages are these. But for now, put in your mind that moving averages are zones. You can see that at this part of the chart, let me zoom it in. You can see that at this part of the chart, it got to a point where sometimes the market will hit immediately and run. Let's take the red one, okay? Let's take the red one. Can you see? At this zone, the market hit and passed a little. Can you see, guys? But at this zone, the market hit immediately and returned. The next zone, the market hit immediately and returned. Can you see how it is? So this is why moving average is a zone, but it's not a single line. You must put in mind, okay, the moment it hit the 50, now I'm ready to search for an entry confirmation pattern. So how do you trade with these moving averages? How do you plot moving averages on your chart to trade and make profit? And what are the rules you have to follow? What the first thing I have to do is that let me open a blank chart so that we start fresh. Okay, so file, new chart, and maybe any chart. New chart, maybe let's say pound USD. So this pound USD. When you open a blank chart on MT5, this is how it's going to look. You must set the template to suit your specifications. So the first thing you have to do is that if you want a white background, then you go to properties, you set color on white, right? You go to properties, you set color on white, which means it's going to give you a white background. If you want a black background, you're going to properties and you set black on white, which means black on white background. Or if you want a black background only, you just go to properties, you set what? You change, let's say the color on white, you can now change the background to become black. So you have to decide. And there is grid, and you can clean the grid using Control plus G will clean the grid. So this is our green and black background. Or if you want white, you can also choose the white background. But for this demonstration's sake, let me use the black background because I've been using the white background for some time now. So now that you have your chart, we have now insert our moving averages. So we can go to insert and go to indicators and go to trend, and as we select moving averages. So which moving average are you going to insert? Now you are going to insert 20 moving average, 50 moving average, and 100 moving average. You can also add 200 moving average. But as a day trader, you are mostly going to use the 20, the 50, and 100 to trade. So we are going to insert. So the first moving average, let's insert our 200. Okay, let's insert 200. It's already as 200. And we are going to use exponential moving averages. There are several moving averages you can use to trade as a trader. But the one that I prefer, if you want to follow my steps, then you have to use the exponential because I like the exponential. The exponential is more closer to the price data, okay, to the candlesticks than when you use maybe simple moving average or smooth or linear weighted. Okay, so let's use exponential moving average, which is EMA. So when you hear people talking about EMA, it means exponential moving average. So we use EMA of 200. Click, right? Can you see? Yes. Let's insert another one. Insert indicators. And then trend moving average of the next one, moving average of 50 or moving average of 100, and then let's change the color to any color that will be brighter. Good. So the width, let me reduce the width and like that. Same way, you have to also plot other ones. So let me plot other one. Let me plot file, new no. Let me plot all of them, guys. So trend moving average of 50. I'll change the color to red. Bang, it's on the chart. Let me reduce the width. Properties, I want to reduce the width, okay? So I'll make it a little thin. Or if you choose the second one, okay, let's maintain it like that. Now the last one, which is a moving average of 20. So we go to insert and trend moving average of 20. And I prefer my color to be this color. You have to choose your own color. The color does not matter. The color of the moving average does not matter, okay? Even the size does not matter. All what matters is the value you're putting there. So let me reduce the size of this one. Let me make it very thin since it's the 20. Now, moving averages are plotted on your chart. How can you make money with this thing plotted on your chart? What you have to do is that you have to open your chart first. You open your chart with the currency trend meter. Using the currency trend meter determines which currency is strong, which currency is weak. And then you make the strongest with the weakest. We only use moving averages to trade when the market is trending. It is a trend following trading strategy that we use the moving average to trade, guys. We don't trade moving averages when the market is ranging. The market is trending, we trend what? Trend following strategies. When the market is ranging, we trade ranging strategies. That is why you must use the currency trend meter, because you cannot determine which market is trending and which market is ranging. If the chart has already played, it's easy for you to spot that this market is trending or this market is ranging. But if the chart has not played and is at the peak or the edge, you cannot determine if it's going to trend or it's going to range. So you go to the currency trend meter, you check which currency is strong and which currency is weak. You merge the strongest with the weakest. So currency meter will tell us which currency is strong and which currency is weak to find perfectly trending market. Now, after you find a perfectly trending market, now you have to plot your moving averages. Now, what you're going to do is that you are going to make sure that when you plot your moving averages, the moving averages are in sync with the chart. If the market is trending upwards, it means the lighter one should be up and the heavy one should be down, which is the 200. If the market is trending downwards, like in this scenario, it means that the heavier one should be up and the smaller one should be closer to the price, or with the smaller moving average should be closer to the price, and they must all be in line. So what strategy are you going to trade with this moving average? You're going to trade the bounce strategy with the moving average. The bounce strategy with the moving average. Is it any time the market bounce on the moving average you're going to buy? No. Bounce strategy with confirmation pattern, like bullish engulfing pattern or morning star pattern. So on the chart, you can see that at a point, you can say the market is jumbled up. Anytime the market is ranging, you see that moving average is jumbled up. So what you have to keep in your mind is that when the market is trending, do not trade ranging strategies. The same way when the market is also ranging, you don't trade what? Trending strategies. So make sure that you only use the moving averages when the market is trending. After you determine using the currency trend meter to determine which market is strong and which market is weak and merge them together, then you use the moving average to help you to determine the trend of the market. If the market is trending, you will see that all the moving averages will be in sync with each other. You will see the bigger one, as the market is trending now, the bigger one is on top, following by the next one, following by the next one, then the smaller one will be down, which is the 20 moving average. So we have to put moving averages of what? 200, moving average of 100, moving average of 50, and moving average of 20 or 21. Any of them does not matter. So if the market is trending, you see the moving averages are always in sync. But when the market is ranging, you see that when you open the market, when you open the chart, you see that the market is jumbled up. The chart is jumbled up. The moving averages are jumbled up. The moment you see that, do not trade any trending strategy, because if you do that, you're going to get stop out. You're going to increase the amount of losses that you're going to have in trading, guys. So let's see, as this chart was ranging, you see that the market was jumbled up, right? But at this part of the chart, you can see that the moving averages are sinking, which means they are all in line. The moment you see that, from the beginning, you will not see this. From the beginning, you're going to see something like this. You're going to see, let's look at this one. From the beginning, this is what you're going to see. You see first power move down. Can you see this low was taken? So this is the first low that took to the low. Another power move, another power move down. So now we have three zigzag patterns. Now, the next power move to the upside, you check which moving average is being respected. Now, the next move down. So where are you supposed to enter at this zone? So let me clean this one. Now, when market get to this stage, see what happened. When market hit any of these moving average, when the market hit the 100 and hit the 50, they all reverse. But which one gives you the confirmation pattern? Which of the pattern give you confirmation? You can see that none of these ones give you confirmation, which means you are not going to take the trade anywhere at any of these zones, because there is no confirmation pattern at any of these zones. Can you see, guys? No confirmation pattern. But let's calm down. When the market came back to hit the 20 moving average, what did you see? You saw a very big bearish engulfing pattern. Can you see? So you can either take here, or you wait for market to come and hit again, give you confirmation pattern. Can you see the market came back, hit this moving average zone, and gave you another bearish engulfing pattern? This can even be classified as a morning and evening star pattern, since it has this star in the middle. So you can take the trade here, or you can take the trade at this zone. And where should you put your stop loss? If you take the trade here, it's too far. You have to wait a little for the market to come back a little to take you in, because you cannot buy just, it's too far. Your stop loss is going to be very big, guys. When you are trading, check your stop loss first. So you put your entry order here, market will come back a little to trigger it, and then your stop loss behind the pattern, and you take profit target 182, guys, just 182, and you're out of the market successfully, and you're out of the market. Let's say the second zone, when it came back to the second zone, where should you enter? Let me clean this, guys. Let me clean this. Where should you have entered when it came back to the second zone? Where is the pattern? The pattern is here. Can you see? The pattern is here. So let me create this one too, guys. So your entry here, let me create this. Entry here, your stop loss behind the pattern, you take profit target 1:2, and you're out of the market. You keep doing this until you don't see any confirmation pattern again, or until the trend reverses. Let's see the next zone. When the market came to hit again, see what happened. The same confirmation pattern here. Can you see? So when it hit either the 20, either the 50, either any of the zone, because moving average is a zone, so it can hit past the 20 a little, it can hit the 50, can hit past the 50 a little. But what you're looking for is what? The confirmation patterns around these important zones. So like I said, there was another confirmation pattern here, so you're supposed to take the trade here. So here you enter here. This one's must go, guys. So you enter here, your stop loss behind the pattern, take profit target 1:2. Just take 1:2, and whatever happens in the market, you don't care again. So this is a simple way we can trade with the moving average, and it's very profitable. If there's no confirmation pattern, you don't take. You keep taking it until the trend reverses. At this zone, can you see there's another confirmation pattern here? See, another confirmation pattern here, guys. So because of that, the market also went down. So assuming you are trading this strategy, by this time you would have gotten, just standing at this chart alone, you can get about 4 or 5 trades to take, since they are giving you confirmation patterns. If they don't give you any confirmation pattern, guys, do not take the trade. We trade trending strategies with moving averages with confirmation patterns. If there's no confirmation pattern, don't take any trade. This is how you can trade it moving averages. If you're able to do that and you take sample of trades several times, with good risk reward, you become profitable. So what you have to do is that you go to your charts, test this thing, okay? Go to your chart and practice, guys. Practice makes perfect. Don't think you're just going to learn something once and you're going to make millions out of it, guys. Don't be deceived. Practice makes perfect. Everything you have to do, you have to what? Practice it. So you go to your chart, this concept you've learned, what do? You go to your chart and you practice to see the zones I'm talking about, the ranging zones, the trending zones, and see if you can find this entry criteria there. Then you see that you are beginning to master it and begin to bring profit to yourself. If you don't master this thing and you just want to make the money tomorrow, so you go and say, hey, SETH OWAS says that I should buy with moving average, I should sell with moving average, so you just go and buy and just go and sell, guys. You're going to hit your account. You're going to give your money to the broker or to the next guy who is winning in forex. Do not lose your money before you learn your sense, guys. Please, I'm not insulting anybody. I'm saying that do not lose your money before what? You learn your lessons. Learn skills, the right skills required before you think of putting your money in the market, guys. The broker will not come and force you to put your money in the market. You have to decide, okay, am I ready to trade? This strategy I'm trading, have I tested it? Is it something that I'm comfortable with before you click sell or you click buy? This is just a word to the wise. If you enjoyed this video so far, hit the like button, subscribe to the channel, and come back every time to watch such videos. For the meantime, go back to your chat, practice what I've talked about, guys. Teaching alone is not enough. Teaching goes with practice. So go home or go to your chat, take your phone, take your laptop, or just go and sit in front of your desk and practice. This is towards your mentor signing up. Bye.